Last week, I talked about that we still start within the trading range. This is the trading range at the moment. And last Tuesday, there's a economic data. It's the Joe LTS, jobs opening. It doesn't really post it well in terms of the numbers. That's why we see that there is this big spread, bearish bar. Although in the end, we got a bit of the demand tail, but still look at the supply. There is a spike of the supply at this bar right here. Doesn't really pose a bullish picture for me. And especially if we look at the level, every time it hit the level, there is supply coming out. This is the level. Take a look at this bar here. We got spike of the supply here, and also here, spike of the supply. This two bar is here and here, so it doesn't count. And this bar right here, although it's bullish, but there is also increasing of the volume, presence of supply. And also here, this bar, we got spike of the supply, and also this rejection tail, also consider relatively high supply. This level, like 41.75, is a tough nut to break. We really want to see a commitment above this level. And every time it approaches a level, we see there's a spike of the volume, spike of the supply showing there's still presence of the supply at this level. What we want to see is that when the price approaching the level, the supply decrease, the volume decrease. So we don't want the supply keep coming out at this level unless it could have an increasing of the volume and then to initiate a breakout. Means the vertical absorb the way up. But so far, whenever we have attempt to rally at this level, attempt to break out, then there's a spike of the volume. Means there's still people selling into strength. They're taking profit and selling into strength at a level because they just see that previously from this level, rejection tail, and then from here, all of this, the previous resistance level, and then until we entering into the short-term consolidation. So Tuesday, we got this rejection and then bearish close. Wednesday, we got a continuation to the downside, and eventually that's continue into the week. This is a bearish swing, comes with increasing of the supply, increasing of the volume. But when it actually hit the axis zone, axis level, this is where the support come in and then become the resistance, now turn into support again. Previously, when we have this effort versus result showing up here, then it started a rally. I talk about a day trading event happening somewhere around here, probably is on this bar. At the moment, we see that happening here. We got effort versus results and then followed by a rally. It might not be that obvious in a daily chart. Let's dive into the hourly time frame. So if you look at this is shortening of the truss to the downside. We see that the truss is getting shorter and shorter. It means that the progress to the downside is getting shorter. And that happened right at this axis zone, 4070, all the way to about 4100. These are the support zone, the axis zone. And most importantly, if we look at the daily chart, let's look at the daily chart here. We see that the spread is smaller, but that comes with slight increase of the volume. Again, effort versus result. What's preventing the price from moving downwards and moving to break a lower low here and to close lower is the demand. There's demand presence at this level, at this zone. That's why after that, we could anticipate there could be a rally. That is the confirmation. And then yesterday is like a test with very low volume. It's like the market is very quiet, low volume. There is nothing to chase, nothing to follow. So it's like a normal test. So far, I still want to see commitment above the level, at least 41.75. This is still the trading range, no doubt. But in terms of the volume, I still see that there is presence of demand at this zone. and there is presence of supply at the top right here, 41.75. So until we see a better price action or decreasing of the supply, it's going to take some time to have a few more attempts to break the level. Ideally, what I want to see is another attempt that comes with relatively low volume, unlike the spike of the volume, and it could have a very shallow type of the reaction. Then likely there could be a successful breakout from here on. Right now, S&P 500 is not outperform. It's not the best type of the index, but Nasdaq is the best. It's outperforming. In terms of the price action, I see a higher low form. In terms of the supply, I see that there's a decreasing of the volume, decreasing of the supply, and is approaching the resistance zone again. This is a price action that we would like to see before a breakout. First, there is a pivot form, uptrend, reaction. Here goes a pivot. So subsequently, there is multiple attempts, although it's barely just touched. Still, it's an attempt. But until we see this, there's a touch of the previous swing high. Let's take a look at the reaction. The reaction is a higher low with decreasing of the supply, suggesting that it's getting closer to its goal to break out of this level. So if we can have another shallow reaction, likely we could see a decent breakout from here. And after that, next level should be around 13800. That's the test of the previous swing high level. That's Nasdaq. There are a handful of the stocks that actually push this index up. Let's monitor the rest of the stocks to see whether they will have the improvement in terms of the market breadth. Means we'll get more and more bullish setup apart from the heavyweight stocks. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.